Whereas probably the majority of real estate investing that's happening is people who do have a job and that they're just supplementing their actual income. So you do have to have a personality that is.
All right, welcome back, everyone. Just going to jump right in with you, Danny. We have a special guest we want to introduce today. Today we're having a discussion with Anson Young. Anson Young is a real estate investor and real estate agent. He's based out of Denver, Colorado. Super knowledgeable. He's the founder host of The Property Squad, which is really an awesome podcast and YouTube channel. Definitely recommend you go check it out. He's also owner of Anson Property Group. He is the author of the book Finding and Funding Great Deals, the hands-on guide to acquiring real estate in any market. And you can also find a ton of his content that he's written on BiggerPockets, as well as on their YouTube channel. So, Anson, welcome to the show.
Hey, thanks for having me, guys. This is exciting. I'm excited.
Yeah, we're excited to have you.
Yeah, I was excited, as a financial planner by training, I encounter real estate clients who are interested in real estate investing. But, our perspective is somewhat limited because while we know a lot about real estate and certain aspects of it, we as planners are often not in the trenches living in that area. And so when I was checking out your channel, I was just really impressed by so much knowledge you have on so many cool topics and nuances that I wasn't even aware of. So I thought we'd just have a discussion today, maybe share some of our perspectives on both sides, and just give our listeners, a more well-rounded knowledge base so they can approach this topic just better armed to be able to navigate this space, to know, is real estate investing a good fit for them? What are the pros and cons? What are some things they need to be aware of? Just, it could be high level, but we can go down any rabbit hole we'd like. We are in the company of nerds here. Like a lot of people who tune into this channel are very nerdy and interested in their personal finances. So we'll take it at that. But yeah, I think that the place I wanted to start, Anson, was just from your perspective, what originally got you into real estate investing? Like, what, as an individual, what drew you to that sphere? What was really the thing that kind of tipped you over the edge and you were like, I need to go in that area. I'm super interested in this. I'd be curious just to get a quick background of what drew you to that area.
Yeah, so my origin story is basically I was in tech. I was in IT for about 3 or 4 years before I got laid off. I thought I was going to be in tech forever. It was just my dad was in tech for telecom. He, spent 35 years doing that. I just figured, I kind of lucked into a job. It paid well. And then after, 3 or 4 years, I got laid off. And so this is, 2003, 2004-ish. And so everybody got laid off during that time. All my friends in tech got laid off. And it wasn't a great feeling, to be honest, to have, a corporation just say, hey, we got bought out. We don't need half of you anymore because we got these other guys. And having, your finances all in someone else's hands wasn't my favorite thing. So I did bartend for a little bit, which I still consider, top 3 jobs I've ever had. It was tons of fun.
Nice. Yeah.
Got to talk to people all day and work weird hours and hang out with some crazy people. But I knew that I couldn't be like a 45-year-old bartender. Like one
Sure.
day in the future, that would be hard. And so, at the same time, kind of intersection of events, my brother had just had their first kid down in Phoenix. I was kind of, a nomad. I didn't have like a stable job that was corporate or anything. So my wife and I decided, let's go down to Phoenix for a couple of years, be close to our, new our new niece, and we'll try that out. And right before I left, a friend of mine, Paul, he handed me a book called Rich Dad, Poor Dad, which is kind of like, it's a basic origin story for real estate investors. Like,
Yep.
9 out of 10 of us would be like, yeah, we read this book and it changed our mindset.
Definitely.
Unfortunately, I don't have anything more unique than that. I read the book, it changed my mindset. And, it was landing in Phoenix. It was kind of I could double down on on tech, or I can go and try this real estate thing. And so I got a job as a bartender, and I went down the real estate path while, to pay the bills while I was learning. And so that's kind of how I got interested into it. And then it changed my mindset, and I knew I could probably never go back to the cubicle. Like, it just wasn't, I'm just not built that way. Like, I just immediately would think of how else can I make money that's more, interesting or creative than, working 9 to 5? And so for better or worse, that's been my path ever since.
Yeah, once you start working to yourself, it's hard to go back, isn't it?
It is for sure.
Yeah, I mean, as an aside thought, like when you mentioned, it's rather uncomfortable having your finances entirely in the control of somebody else and you can never go back to the cubicle. I really do think, I mean, I'd be curious to know if you agree with this or not, Anson, but like people I've worked with in the past when doing financial planning, especially if they were interested in real estate, they very much displayed a character trait that was unique compared to other clients, which is they valued probably more so than others that sense of control, having the ability to really control the outcome of the situation at hand, rather than kind of being left to the whims of other parties. Is that something that like that spoke to you that also maybe drove you to that area, or do you see that in general when you're talking to other people in your sphere?
Yeah, for sure. I mean, I have, half my friends are probably, lifelong corporate 9 to 5 guys, and the other half are just kind of crazy entrepreneurs. And I get both. Like I get the stability of just having that paycheck coming in every week. There are definitely months and years where I've envied that of like, oh, I just have to show up to work and I get paid. I do a good job, I get paid. Whereas entrepreneurship is just a little different, where you have to go and grind and generate that business to get paid. And so, and then, friends who are on the entrepreneurial side who are doing, really interesting and crazy things, building companies, building portfolios. And the, the corporate friends look at them like, I could never take that kind of risk. I couldn't even sleep at night doing that kind of thing. And so, I get both sides for sure. And I've, you know, there are times where the steady paycheck sounds very sexy. And then there are times where there's no way I could ever do it. So I'm in a weird place.
No, I mean, you made me think of another question on that. So I want to dive in deeper into some areas of real estate investing, but before we go there, let's riff on this idea of who it might be a good fit for. Now, that question, who it might be a good fit for, there is a finance element there, right? There could be certain financial elements in a person's situation that could make you say you either are or are not a good fit for it. But then there's also the behavioral element, right? Like the personality element. And you've hinted a lot of those elements. Like, how much weight do you put or emphasis do you put on the character side of things, right? Because you mentioned, like, you see both sides. Some people like that steady paycheck and they need that for the comfort. Other people are very comfortable kind of going into, as you described it, I love the word crazy entrepreneur, aspect of things. And then some people fall in the middle. But, when you're thinking about the merits of real estate investing and the risks and the rewards, how much weight do you put on the person character-wise just needs to be the right fit? Like, is it equal to the finance part of it, or do you give less or more weight? I'd be curious to get your insight on that.
Yeah, I mean, I think, I kind of make it sound like this weird, this crazy Wild West thing where you have to be, an outlaw to do this. I think to do it full time and that be like your only job, that's a little bit on the fringes. Whereas probably the majority of real estate investing that's happening is people who do have a job and that they're just supplementing their actual income. So you do have to have a personality that is a bit more risk. They're willing to take a little bit more of a risk versus just throwing money into an index fund. That's
Sure.
pretty easy and normal. Going and buying a duplex and living in one side and renting out the other. That's a little on the fringe, but plenty of people with 9 to 5 jobs can rely on their W-2 to help them qualify for all kinds of cool real estate investing. And so, there's kind of different tiers of inside of there. There's investors who they're full-time investors, but they couldn't even see the risk of going outside of their market and buying a house, on the East Coast, to rent that out. Like that's too much. That's a bridge too far for them, even though they do
Right.
it full time in their market. And so it takes all kinds, but I would say the majority of real estate investors, they're probably just people who have, a job. They bought Like I have a friend, he works, he's a manager at REI, and his wife's a hairdresser.
Awesome company.
Yeah, no, yeah. Every time he tells me about like their gear shelf, I'm just like, what? You can borrow anything you want? That's awesome.
That's amazing.
um, they had a townhome that they when they first got married, they moved out and it was kind of a down market, so they decided to rent it instead of selling it. And they bought a house you know, probably 20, 30 miles away. They've had that property for going on 15 years now. They don't
Wow.
see themselves as real estate investors, but they're benefiting from the income, from the tax benefits. They don't see themselves as, the crazy Wild West guy that I sometimes come off as, but they're real estate investors just as much as I am. They just don't think of it, and they're not going out and looking for their next property, but they're like, this is
Yeah.
a cool thing to have. I may not be doing it anymore. I'm not going to go look for more opportunities like that, but they're a real estate investor too. So it kind of takes all kinds.
Yeah, that's very true. It seems like it's pretty common or very easy for kind of your average American to end up, as a landlord in a way, right? Inadvertently, almost,
Mm-hmm.
where they just moved to a new home and it didn't make sense to sell a property at that time, and time goes by and all of a sudden you've been managing this other property as a rental for 10, 20 years.
Yep. Yep. Exactly.
I am curious, what do you think causes someone to kind of flip that switch though and go from, oh, we've been inadvertently or now we've been renting this one place out? What causes someone to flip that switch and make that decision to go buy the second property
Sure.
or to start collecting additional properties?
Yeah. And I was in that boat when I was first talking to my friend Paul about, he had read Rich Dad Poor Dad. I hadn't read it yet. And my brain was just like, okay, so the bank gives you a mortgage. Why? How would they give you a second mortgage? Like, this doesn't make sense at all. I remember standing in this parking lot of a Winchell's Donuts not far from, here. And it's like 11 o'clock at night. And we just got finished doing a hobby that we do together. And it's blowing my mind. I'm like, why would a bank give you a second mortgage? That's ridiculous. And then I read and I got a little bit of education on the subject. I did network and meet some people who were doing it, and it's kind of a combination of probably education and then seeing that it can be done. Like the book can tell you anything, but if you meet somebody who's like, oh yeah, I've just bought my third property, when you meet them at the PTCO meeting or something at your kid's school, and you're going, three properties, like that's crazy, tell me how you did that. And so some of it's probably education and probably just kind of opening up the world a little bit of finding people who are actually doing it and learning what you can from them. And that those things will probably get over the hurdles of most objections that people would have about going from just being a homeowner to now being a homeowner plus having a rental or investing into a self-storage unit or syndication or something like that. Like,
Hmm.
if you can show them the returns and the tax benefits, that's one thing, but they still have to get over kind of a risk tolerance on their own merit, because
Absolutely.
not everybody's doing this and it's not totally common. But I mean, just in my normal like school life, who aren't my real estate friends, with my son's school, I've met two or three investors who were just kind of either doing it haphazardly, like the REI guy, or I met another guy who's like, hey, I think I've seen you on BiggerPockets. And he tells me about the 13 rentals that he has. And they're
Oh
all
wow.
nice suburban, expensive houses in a nice school district. And he's just accumulated them over the years. And, so it's like you run into us here and there, but, but yeah, getting over some of those hurdles and just having just a little bit of education and somebody opening the door a little bit and saying like, hey, this is how you do it. This is how I did it. And so that's why YouTube and places like BiggerPockets are hugely popular, because you could be a W-2 earner and go learn, all the things that you need to do to flip houses or rent houses or whatever it is that you want to do.
Yeah, that's awesome. And I think the way you described that the story about your friend at REI, how they just haphazardly fell into this house that they kept when they moved and kept renting it. it almost seems like some people can very seamlessly kind of carefully bridge into getting a real estate investment property under their belt, without having to full send, go into the Wild West like you described. And then, like you said to your question, Danny, like what's that thing that tips people over the edge to go for their second property or their third? From the financial planning perspective, when I've encountered clients in the past who have kind of tipped over the scale in there, um, I definitely see, like you said, Anson, like a greater appetite for bearing risk and comfort with that. But at the same time, I acknowledge the risk, right? Because, if you start leveraging debt to get more properties and then property values plummet, or maybe you blow up in your debt and you don't have the cash flow, if you have tenant vacancies, things like that, you can get into a bind. But there are also ways to mitigate that risk as well. Like, I mean, one of the things, Anson, that Danny and I talk about a lot on this podcast is like when you think about basic fundamental financial planning, every solid financial plan is kind of built on the bedrock of somebody having a good emergency fund established. And there are all kinds of aspects you can, 3 to 6 months, or what do you throw into that bucket? How do you calculate what your emergency fund is and what's included? But I've seen, successful clients in the past with multiple real estate properties who maybe take on a year or two of expenses in their emergency fund to offset some of that risk should they hit tenant vacancies and the cash flow is not coming in, but they still need to make their mortgage payments and pay their property taxes and pay their homeowners insurance and things like that. So, I don't know, there are always ways to balance out risk. I think a lot of people they look at something at face value on the surface and they think, oh my gosh, that looks terrifying and risky, or, what's the point? But, when you peel back some of the layers, you realize, hey, if I take steps A, B, and C, the prospect of this idea becomes much more palatable to me. So I throw that out to our listeners as something to be mindful of. But I want to go back to a topic, Anson. So house hacking, right? This is something you've talked about on your channel, which is really cool. And I remember hearing you say, for a lot of people, this is a great place to start. And honestly, I'd love to hear your thoughts on, could you explain to us, to our listeners, what is house hacking and why might that be a good place for some people to start when it comes to real estate investing?
Yeah, so this is one of my favorite topics just because, as an agent, I help house hackers. When I started my podcast and knew I was going to do seasons, I knew that my first season would probably be something where something like house hacking, and I just decided, you know what, let's just full send it, let's go. And so house hacking is basically where you buy a primary residence, you live in one part of the property, and you rent out other parts of the property. So that could be you buy a single family home, you live in the master bedroom, you rent out the other bedrooms to friends and cousins and whoever else. It could be, that, and then you Airbnb those bedrooms. You could buy, a house with a basement, put a little kitchenette in the basement, lock off the basement, turn it into a separate unit, live on the top floor, rent out the bottom floor, right? Buy a duplex, live in one side, rent out the other, triplex, same, and then a fourplex, the same thing. So, in a owner occupant loan, FHA and conventional, you can buy up to a 4-unit property with those same terms. Once you get over 4, you hit commercial lending, which is just a different story. So house hacking is usually in the realm of single family all the way up to a fourplex. And so, the reasons why it's one of the better ways to get started is just due to affordability. I mean, I'm in a high cost of living market here in Denver. People who are in their mid 20s to mid 30s, they're looking at the prospect of buying a house. They're seeing that it's not really penciling out that well because, they earn X and the houses cost Y, and they go, man, I don't want to spend, the full 50% of my take home income on a property, right? And so something like house hacking comes in where you can, qualify a little bit higher for something like a duplex using potential rental income on the one side. You live in that property, and the other side of that duplex is now offsetting your housing expense. And so we've seen, through clients, through now the people who I'm interviewing on the property squad, we're seeing people who are, some of them are offsetting, maybe half of their mortgage, which is great, right? You take that other half that you're saving, You put that into, you can put that into the market. You can save up for your next property. What could you do if half your living expenses were taken care of? All the
Right.
way up to, our very first episode, Kim, she bought a duplex in Denver. She lives in one side. She does a midterm rental, kind of to travel nursing um, and over 30-day stays, but not quite a year. And she rents out the other bedroom in her house to one of her friends. So she's providing some housing inventory that uh, to the market. She's also living there for free, plus $1,200 in positive cash flow. So it's like, so my thing is like, what could you do if you could live somewhere in your house? If you can live somewhere for 2 or 3 years, and you can just save up your entire housing expense for the next thing, And so we have clients and friends who they're on their second or third or fourth house hack, because after a year, or a year or two, they decide, I'm going to go do this again. I'm going to go buy another duplex. They rent out their current home, their current property. They go on and they house hack again, and then they just keep stacking. And so my friend John's a pilot. He's on his fourth house hack. He's not,
Wow.
he wouldn't consider himself, a real estate uh, guru or investor or anything like that. But he's, 30, has 4 properties that are cash flowing. And he's so much better off than just renting. If he rented an apartment for the last 5 years, if he just bought a house and didn't offset some of that income, he's so much better off by going with a method like this than just kind of a traditional method or not having something that brings in income.
Wow. That I just I'm nerding out thinking about all the different avenues somebody could take with house hacking, and I think it's amazing. I mean, think about it. Like in your normal daily finances, in order to increase your income or cash flow in any area, it almost always requires you to come up with additional funding or capital to do that thing, right? Like if I want to, if I want a stock portfolio that pays out dividends, I have to put money in that portfolio, right? If I want to, maybe somebody's on the insurance side of things and they want to make like a quasi pension with an annuity, you have to come up with money to create that annuity. But like house hacking, you already have this place where you're living and you're just deciding, I'm going to turn on the faucet and derive some income from this thing that I'm already paying for and already living in. It really does seem like there's just less of a hurdle to get over to create more cash flow when you're already paying for that living expense to begin with. And I don't know, there's something so fundamental about that I find very attractive, especially if somebody is in a position where they're like, gosh, I just really want to increase my cash flow and supercharge my savings and just make more progress. I feel like I'm moving at a snail's pace. Maybe that's a lever a lot of people could pull that isn't given enough credit, right? I think that's awesome.
I'll jump in just really quick, and I do think you're correct in that it's like a much more simple faucet to turn, as you said. I have always been of the mindset that it's a little bit easier for someone who's like, if you're looking at house hacking your current property, it's easier for someone who's single. I would absolutely house hack, a private residence if I were single, but I have a family and children to think about, and so I would never consider house hacking within our current property. But I was curious in terms of timeline as well. Most of these people, are you finding they stay in their home for 2 years and then they move to a new property and that becomes their primary residence loan on the new property?
Yeah, so two things there. So for your question, yeah, so they'll either refinance out, of an FHA loan and then use FHA again, if possible. Sometimes they've saved up enough money to do a 5 or 10% down conventional loan on their next property. I mean, if you're saving like your entire housing expense, you're just you can probably just stack cash that way, and after a year or two, go ahead and just put down that full, down payment. And so, yeah, they are converting that new unit into their primary, and then
Mm.
the one that they're leaving is now, the non-owner occupant investment property. And so, one of the common misconceptions is exactly what you said. Like I'm married, I have kids, I have dogs, Um, and for the most part, that's probably true. Um, but the some of the people that I've interviewed so far, I think 3 out of the 5 are married. 2 out of the 5 have kids. They have obviously different scenario. They're not just renting out the bedroom down the hall to some random person. They're
Absolutely.
they have like a lock off. They have like a basement unit. Like Dan has a full basement unit, and he has two kids and dog and cats and all that stuff. And Katie, she rents out her house while she's on vacation. She's married, just takes the precautions and does all the things you would do with an Airbnb. That's like the ideal house hack. But people are making
Okay.
it work where they have, if you have extra storage in the basement, there are apps and there are websites where you can rent out like square footage in your basement. That's a house hack that could pay for your cell phone bill,
Okay.
right?
Nice.
Or if you have like a detached garage that you're not using, rent that out for guys with tools, guys with cars. I have a client who rents out his garage to a semi-professional NASCAR team, and they pay him
Wow.
$800 a month to store, two stock cars, in his garage. And then another guy who owns a fourplex with 2 detached garages, he rents each side out for 400 each to the same guy. One guy has all of his shop tools in it, and then he stores like some motorcycles on the other side. And so it doesn't necessarily have to be people. There are scenarios where there's like if you have an RV pad or a area in your yard that has an RV, sized place, there are so many people who are looking for an in-town place to store their RV and will easily pay you 100 or 200 bucks a month just to park their RV in your backyard. I've owned one RV in my life. I owned it for 1 year, and it sat in someone's backyard. Then I paid them, $200 a month for the privilege because I didn't want to go all the way out to the RV lots, like the storage places that are so far away. I wanted it, 10 minutes away, and so there's kind of 100 ways to skin this cat, and it doesn't always have to be some like random guy living down the hall from you and your wife
Okay.
and your kids. Because
That's
I
very fair.
wouldn't do that either.
Yeah, I love that because that is for a lot of people I think going to be the common objection, the hurdle
Mhm.
they have to get over. Like my wife and I have lived with roommates before several times in the past to save on costs, right? We split an apartment when we're getting up and running in our careers and whatnot, and it's tough to live with roommates and it leaves like a stigma, right? We've all been there. A lot of people have lived with roommates, whether sharing an apartment with a friend, maybe some people who go to college live in dorms, live with roommates, and so I think there is that bias there. But like you said, Anson, man, I love the examples. There's so much creativity with how you could do that. I mean, when you were talking about the garage, I was even thinking like, heck, why not build an above the garage living unit, right?
Mhm.
I mean, would that be considered an accessory dwelling unit, an ADU? I
Yep.
guess I don't. Yeah, that's one way. And then I mean, I was thinking about your episode, Anson. You did to our listeners. You should go check it out. It's on on the Property Squad. Anson, you did the episode with Dan when he's talking about his basement and how they house hacked that. And I remember Dan was saying in your episode something like, leading up to it, my wife was the whole conversation. The concern was about like, how's this going to affect us? But like within the first week after doing it, her concern completely shifted to, I hope they're comfortable. Like you're, like I hope our guests are now comfortable. Like your attitude can change. And I remember, I mean, that's a cool episode too because Dan was talking about, you know, all the things he did to the floor and the padding to reduce the sound and like truly, I mean, separate off the basement unit so that you cannot hear one another. You really have your autonomy in your space. It's almost like they're not even there. You hardly see them.
Yep.
So to your point, I really think there are ways that you can overcome that hurdle. You may not be able to fully mitigate it 100%, but darn, you can come pretty close, right?
Yep.
You know, that's really cool. On the house hacking topic, Anson, what are some of the pros and cons? What are some of the things that people need to really be aware of? Like the things that I'm with you on the house hacking enthusiasm. I'm right there with you. But I am wondering, can we spell out some of the things that could be some of the cons, things that people really need to be aware of that maybe they're not anticipating with that type of approach?
Yeah, I mean it's definitely not for everybody. Obviously, everybody has different personality types. I personally couldn't live with roommates anymore, being in my mid 40s and, have a teenager and married and all that. I could probably live in a fourplex or a duplex and live in one side and rent out the other as long as there was, pretty much full separation. And that wouldn't be too hard. But I think that the things that people need you know, to realize is that, they're, depending on the strategy, it's probably a bit more expensive than just, buying a house and or buying a duplex and living in one side and having a long-term renter in the other. Sometimes you have to furnish these properties. Like you
Mm.
said, Dan, he did a lot of soundproofing. Um, he probably went like, 150% overboard, but that's his house. That's, he didn't want to hear anybody down below and he didn't want them to hear him. And so,
Sure.
so that he, put in a lot of extra money in order to, completely soundproof this thing. And then you have to like, I think that you really have to just think of an exit strategy. So, I mean, if you're, you just have to know what you're getting into at the beginning. So if you're planning to be there for a year or two and move on, make sure that the property is set up for a good exit, whether you're going to sell it, whether you're going to rent it. A lot of people, they'll run the numbers beforehand of like, what will this look like when I move out and I move
Mm.
on to my next property, or I get married and, my wife won't want a house hack and we're going to go just buy a regular house. Like, what is the long-term strategy for this property after we're done house hacking it? Can it still cash flow? Does it still make sense? Do the numbers still make sense? So I think that there's probably, you know, a few dozen things in there to consider, but, having a good exit and then knowing kind of what you're getting into and the costs associated. So if you have to like, I have clients right now that they want a full basement unit with a kitchen. And so we go in and we price those out, from the showing of just like,
Mm.
okay, well, this will probably cost, X amount. And so you know that you have to have that much set aside for, you buy the property and then you have to be under renovation for, the next month or two. And so just kind of knowing everything that you're getting into um, is a huge start.
Yeah, that's on the upfront cost. Like if you have to refurnish, I that was on my mind too, and I'm trying to spin it in a optimistic light here. So I do think that is a risk. I agree. Like when I'm thinking about someone's personal finances, the need to come out with capital either from your savings or taking on additional debt to make those renovations, right? That of course introduces a risk. And I do agree that I think when people get excited, they may not be thinking real time in the moment how much they're actually spending and going, this is going to affect my rate of my return on investment because this is an expense coming out of future cash flows that I'm going to get from rent.
Right.
But I'm also thinking that like, there is a chance that depending on the renovations, it's not a guarantee to the extent it will do it, but you are shifting money into your home,
Mm.
which in theory could also improve the value of the home itself, right?
Yep.
I mean, do you see? I mean, do people overestimate how much they think renovations and things like that improve the value of their home? Like, do you have a general rule of thumb? Like, I know it's not always guaranteed to be dollar for dollar. In fact, it's probably never dollar for dollar value increase in your home. Can you speak to that at all? And in your experience, what do you see on that end?
Yeah, I mean, I mean, there are definitely some certain things that are very niche. If you're adding a basement unit, there is now only a subset of new buyers who are going to come in who want a kitchen in their basement. You know, um, and
Yeah.
so you have to kind of take that into effect. So if you over renovate your basement and you put down, marble and stainless steel and everything is just, premium downstairs, but you live in a C-class neighborhood, you over renovated and you probably will not get your money back out. No question about that. And there are areas with ADUs where, the area is zoned for an ADU. Putting up an ADU puts you back in that niche, right? But with
Mm.
affordability being a problem in a lot of markets, those properties are seeing almost a dollar for dollar. So if you spend, $350,000 on that ADU, I mean, you have a legal, 2-unit property. And so the people who are
Right.
coming in to buy that, they see the value and it's actually, worth and appraised at that type of value. And so,
Wow, that's great.
but people do,
Interesting.
absolutely they underestimate rehab. If you're not in, the rehab business, you are overwhelmed. Like most of my clients rely on me for, you know, contractors and vendors and, you know, bids and getting all of that squared away because they have full-time job. They want a house hack, but they have no clue how to like manage a rehab, make sure it's on schedule, anything like that. And so anywhere that we can help them, through that process, the better. But for a normal person who's, just lived in an apartment their whole life and doesn't, swing a hammer and do handy projects around, the thought of, a full basement renovation is probably scary. So so yeah, from the money side to the time side, there's probably a lot of moving parts in there for people to, get a little nervous when they go into a project like that.
That there's so much wisdom in there. Yeah, thanks for that answer. That was awesome. And would you say the reason that maybe you see a better retention and value when you're putting money into an ADU versus a basement, is that truly because it is a separate entity, it's a separate unit?
Yeah, I mean, usually the ADU's new as well, so it's kind of new construction, and
Oh,
and
right.
it's separate. And so, you usually have, a nicer product on new construction versus your like, 1920s house that is the main house. And so yeah, for those reasons, absolutely.
Cool. Taking a step back, more broadly speaking, I mean, we've been spending some time on house hacking, which I absolutely love. Just real estate investing in general. I want to touch on this for a minute. And Danny was, when Danny and I were talking, like he had a good point, which was like, we're in 2024 and interest rates are high. It's difficult to know if they're going to go up or down, right? New inflation readings came out yesterday, that were higher than expected.
Yep.
And it makes people nervous. And so, I don't know, I guess just want to get your thoughts. Where do you see real estate investing and or even house hacking, in this current environment? What's on the average person's mind, and on your side of the aisle, what's your perspective on this? Be curious to pick your brain on that.
Yeah, I mean, gone are the days of, the 3% mortgage. And so, it's kind of, for investors, it's just getting used to this new, like, this is just the reality, right? We know that our loans, they're higher than market, so they're usually, 7.5 or plus percent.
Mm-hmm.
Uh, and so if you could still make a deal pencil at the higher interest rates, it's kind of a case of, do you lock in now, and you make this property work, it pencils out, it meets your formulas, it meets your business goals. And if the rates go down, you could refi and have better cash flow. If the rates go up, you're locked in. And so to me, it's kind of a win-win. Like, as long as that deal works today,
Okay.
right? I can't stretch it. I don't want to, this will work if the rates go down and I can refinance. That's a risk that I'm not excited to take. So it has to work right now for the lowest tier of cash flow. That's my
Mm-hmm.
philosophy. So at today's rates, with a long-term rental, does this property work? Because we're going to try to maximize that cash flow. We're going to try to do a room by room rental, or we're going to do a midterm or a short-term rental, to maximize the cash flow side. That's about the only lever I can really control. I can't control the interest rates. Um, I can do things to help me find better deals to possibly buy below market, of course. But the main one that I can really turn is the cash flow. And so, will it pencil with the lowest tier of cash flow at today's rates? Yes. Okay, this meets our criteria, and I have no problem with that, because if the rates go up, I win. If the rates go down, I double win because I can, lower my
Yep.
expenditure. And so that's kind of my philosophy on that. And it seems like any investor who's sitting on the fence waiting for like a 5% investor rate, they're just, to me, it's just a waste of time. Like, if you can make deals pencil now, there shouldn't be any stopping you, really. And as far as house hacking, it's sort of similar. It's taken a while for general public and buyers to be like, well, I'm waiting for the rates to go down before I buy. This spring has been extremely busy with buyers and in my agent business, of just people going, look, if the same thing, if the rates go down, I could refinance. But I'm tired of sitting on the fence waiting for something I can't control. I'm going to go, make it work in the market. And that's what they're doing. So
Okay.
it's interesting. You can't play with the interest rate. So we got to play with other things.
So some of the people that may have been kind of tentatively sitting on the side, they're coming to accept the new reality and just moving forward with those decisions now.
Yep.
I was curious when you're talking about penciling out the deal, making sure that it works, it's profitable, it cash flows. When you're doing those calculations, are you factoring in a certain percentage of vacancy or time to get new renters in?
Oh yeah, absolutely.
Okay.
So there's kind of a loose rule of thumb of and it's a little bit unrealistic, but if you can hit kind of this 50% rule where 50% of the income coming in should be earmarked for expenses like um, deferred maintenance, capital expenditures, vacancy, things like that, and then the other half towards debt service, and then anything left over is profit.
Okay.
50% is pretty aggressive. It probably sits closer to like 30% expenditures, but some
Mm.
people like that rule of thumb to make it, clean. Um, but yes, you definitely have to budget for some sort of vacancy. Right now, we're in a very low inventory market. Vacancies like I don't know, it's like 2% or something like that. Um,
Oh,
if
that's
you
nice.
want to be more conservative and budget in, a 5-7% vacancy, I don't think it'll hurt you. It shouldn't really affect your cash flow all too much, but you know, right now we're in an environment where things get rented really fast. And now
Mm.
that could change in a year, 2 or 3 years. So just make sure that you're building in a little bit of a buffer and not just going off of the 1.8 vacancy, percent, which is probably
Absolutely.
also unrealistic.
Yeah, margin of safety, right? Build in
Exactly.
the margin of safety. Yeah, I was gonna say really quick on something you mentioned. First of all, I fully agree with your attitude on this is the environment we're in, right? This is the new reality. Nobody has a crystal ball, and so I'm generally, I mean, Danny and I talk about this a lot. It's like you have to work in the environment you're in. You have to work with the data you're given, and making big decisions, putting so much emphasis on factors like, but what if interest rates go up? But what if they do go down? You run the risk of really missing out on a lot of opportunities. And I love that example you give. I see it on our side of the spectrum too. I have conversations with clients, Anson, in the past, and even family members and friends who approach me now who say, gosh, look at all the CD rates at the bank right now, or fixed income rates. I can buy this thing, but I want to wait and see if rates go up before I lock in. It's like, well, you wait just a couple months. That's interest you missed out on by just buying something today and start earning interest and return on your investment. And like just a couple months is going to require a far greater interest rate on this new product you're hoping to get if interest rates go up. And I almost see the same thing here too. It's like you're hoping for these rates to go down to 5% mortgage, 4% mortgage, the days of the past. Maybe that could happen, but if you're sitting around and waiting, that's how many more months you're not collecting rental cash flow, right? Like,
Right.
and that's, I don't know, I think that's such an important aspect to think about. It's like, make your capital efficient. Don't have it sitting idly by, with the exception of maybe your emergency fund, right? That type of thing. But that's, I just thought that was a great point you brought up. I think when it comes to real estate fitting into one's overall portfolio or allocation, right? Like on the financial planners side of the aisle, we're thinking like, a lot of financial planners are like, well, we want to make sure we're not too overweight in any sector, blah blah blah, that type of thing. Like this much to U.S. stocks, this much to international stocks, this much to bonds or this or cash. And I often see, financial planners criticizing real estate investing because it seems like you're putting so much capital into this one thing, and when you're tying it to the overall percentage of one's net worth, it appears that it's this massive allocation to that area. I'd just be curious to know, do you have any thoughts to maybe help people see that in a different light? I agree with the sentiment of like, not overextending yourself into one area and putting all your eggs in one basket. Totally understand that wisdom. But I mean, where do you see things on your end of the spectrum, right? Like, how do you view that conundrum when it comes to real estate investing?
Yeah, that's a great question. I think that, going back to the full-time guys who are, entrepreneurial about this, I find that most of those guys are just all in. Like they're all in on real estate. Um, Probably not the best, you know, allocation strategy. And I'm one of those where I don't have a ton of money in the market. I probably
Mm.
should fix that soon, but we're always like, try to allocate money back into the things that we know. Like if you gave me a quiz on, the stock market, I would probably just absolutely fail. And so I find that we're not all like that, but it does seem like we're weighted heavily on that side. I think that there's absolutely a happy medium between what I'm doing and what the financial planners are saying, where they might be risk adverse on the market, or maybe it's an asset class that they don't fully understand, or I think like you said earlier, it's probably not something that they're getting paid a commission on, so they're not recommending it fully. They're like,
Right.
well, yeah, if you keep it all with me, I win. And so, there's definitely a medium in there. I think that there are ways to invest in real estate without having a ton of money out of pocket, which is unique. I go buy a stock unless I'm buying on margin or something else that I don't understand. Uh, then
Yeah.
I can't pay, 10% of that amount, and I can't have somebody else pay
Very
off the
true.
balance. And so those are the things that excite me about real estate that don't excite me about the market. And but at the same time, it's obviously much more healthy to have a balance of different things going on, so that if one sector fails, you at least have something else to kind of rely on.
That was that was awesome. Honestly, I think that's a great place to wrap up. I thought that was such a great answer, and I personally learned a lot just from this
Absolutely.
conversation.
So there is one last thing, Chris,
Oh,
before
yeah.
we go. Anson, we are following in the footsteps of some other very, very well done podcasts. And our last interview had a question, and I'm going to posit that question to you, and it is unrelated to real estate.
Okay.
We'll give you a go at it. So, to what extent do you see Bitcoin and cryptocurrency negatively affecting the economy?
Oh boy.
Yeah.
That's definitely an asset class that I don't understand. Even though I own a little bit.
Okay.
That's oh man. I'm gonna I'm gonna say that I'm not exactly sure. It is a very interesting, arena. There's a lot of things in real estate that are trying to do, attached to the blockchain. I would
Interesting.
say
Okay.
I would say that I generally just don't know enough about it to give you a smart answer for sure.
Okay. That's fair. Well, thank you so much. This has been great.
Awesome. Yeah, thank you guys.
Yeah, Anson, this has been a real blast. And to our listeners who are interested in checking you out, where's the best place you want to send people to reach out to you if they have questions or if they want to check out what you're doing?
Yeah, absolutely. So on Instagram, I'm at Young Anson, and on YouTube, I'm at Anson Young. So pretty easy.
Awesome. Definitely recommend listeners go check out Anson's content. It's really wonderful. Anson, this has been a blast. To our listeners, thank you so much for tuning in. Hope you enjoyed the conversation, and we'll see you next time. Take care.